Ladies and gentlemen, while Bitcoin is moving in perhaps the most boring fashion we've seen in months and not doing anything really at all, you can go check out my video, by the way. This one right here is Bitcoin still in danger 2 days ago if you want a short-term Bitcoin update. But while Bitcoin's doing nothing, we need to discuss the macro. We need to zoom out and look at the macro charts because Bitcoin, believe it or not, as you may have been fooled by the last few weeks of price action, is still in a macro bull market and it is still targeting higher prices. So we need to be getting a good estimation of where those high prices will be and what the structure overall will look like. I've done prediction videos in the past, but this video is going to be focusing more on the structure. What is the Bitcoin cyclical structure looking like? What will this bull market look like in general? This is a very, very insightful chart. I'm going to draw it out step by step for you here today and try not to waste too much of your time. So let's go ahead and do it, right? It's based on angles. Now that might sound strange to you, but bear with me. So if we go all the way back to the origin of Bitcoin price action in 2010, 2009, right? And we draw a line right here, an angled line. And we draw that line all the way until this particular bear market bottom right here in August 2015. Now I understand the bear market bottom wasn't actually in August. It was over here in January, but on many exchanges, it was a double bottom in August. So we're just going to do it for argument's sake here for this chart. We're going to go ahead and take a angled line again from the top in 2013 to the top in 2017. We're going to go ahead and take an angled line from the bottom here in August 2015 to the bottom here, right here over here in 2018, December 2018, the actual bottom, not the COVID bottom. We're going to go ahead and take an angled line and draw it right through to the 2021 bull market top. And then we're going to take an angled line from the bottom here in 2018. We're going to draw it right through to the bear market bottom right here in November 2022. Now, what do we notice about these lines? Now, people might look at these lines and they might think, what is this, Wolf? This is weird. This isn't really displaying anything at all. Well, it actually displays something quite significant, okay? And something that is too unlikely to possibly be a coincidence. What you'll notice, okay, look at these lines here. The bottom line, for example. Look at the line over here from 2009. And before we even look into that, I've actually missed a data point right here. Let's take an angled line, draw it from 2011 high to the 2013 high. Now we can go back and we can look at this line from 2009. We can see this line from 2009 has an angle of trajectory of 57 degrees, okay? Now, remember that number, 57. It goes all the way to the bottom here in 2015. And the next line of trajectory has an angle of trajectory of roughly 32 degrees, right? So if I got it precise, it'd be 30. All right, then we have another one right here. Okay, 17 degrees. All right, now what do we have here? We have a trend that's emerging. Now, it's not a perfect trend, but the trend basically is the angle of trajectory of each of these lines between each bear market bottom is basically halving each time. Not quite halving. I could probably nail it down to get you an actual decimal place of what's occurring here, but it's not quite halving, but basically halving each time. It's just under halving each time, right? So 57 degrees to 32 degrees to 17 degrees, right? What's half of 32? 16. We had a 17 degree angle here. What's half of 57? Okay. What would that be? We are 28. Okay. But what do we have here? We have 32. Close enough, right? The point is, it's not quite halving. It's just under halving, right? So again, it would be 16 if it was a perfect half. Instead, it's 17. It would be 28 and point something if it was a perfect half. But instead, it's 32. It'd actually be 29 something if it was a perfect half, but instead it's 32. Exact same things happening on the upside line. So between bull market tops, right, we have 47 degrees right here, okay? Just under a perfect half, 25 degrees. So what's half of 47? Okay, nearly 25. All right, so half of 47, of course, is 24, something like that, just under 24. But instead, we've got 25 right here, okay? What's half of 25? 12.5, but we've got 13, okay? So just under a perfect half each time. So if we have a trend here that's established, and it's a trend, right? Because it's not a coincidence. It would be ridiculous if this is a coincidence. It'd be very, very, very unlikely, not only for it to happen once, okay, with the bear market lines, but for it to happen with the bull market lines as well. The same pattern of just under halving the angle of trajectory each time, from bull market to bull market and bear market to bear market. The probability of that being a coincidence is so minimal, right? So we have a trend here that every single bull market top and bear market bottom so far, the angle of trajectory between the last one and that one has just under halved, okay? Now we can extrapolate this trend forward because it's happened 3 data points to the downside, 3 data points to the upside. So it's an established mathematical trend on both occurrences. We can extrapolate this forward and we can say, okay, we've got the number 17, right? The angle of trajectory is 17 in this bear market bottom here in 2018 through to 2022. So for example, we could go ahead and say, well, if it's going to half again, or just under half, okay, it would actually be something like 9. It should be a 9-degree angle of trajectory from this bear market bottom in 2022 to the next bear market bottom, whenever that may be, okay? And that would take us to a price, say, for example, we see the bear market bottom in late 2026. That would take us to around 37,000. Say it's in late 2025. That would take us to around 32,000. It doesn't really matter when it is. That's up for debate right now. But the point is we get a very good idea of what the structure will be. We can do the same thing for top, right? So we can say, okay, well, it was 13 degrees last time. If it's going to be just under half, let's say it will be 7 degrees this time. That means that we get a very good idea of where Bitcoin could top out in this bull market. So we're getting a very good idea of what the Bitcoin structure could look like. Bitcoin has only ever acted within the bounds of this angle-based pathway. And the pathway is getting narrower and narrower every single cycle. And so right now, Bitcoin can only really go to the top or the bottom of that pathway while maintaining this trend. So it gives us a very, very good idea of what the Bitcoin structure will look like in this bull market and in the next bear market. Now, here's the second question that emerges. Now, I don't know if you guys are amazed by this chart, but this chart is basically pretty fucking amazing. Okay, not to swear, I don't swear very often, but it's a pretty amazing chart, right? I think I'm kind of underplaying here. I don't know how to overplay it. The point is, it's an amazing chart. So far, it's been pretty much perfect. It's very unknown. I've never really seen it before. I've seen a few people comment about it, but I actually discovered this chart just about a few weeks ago, but I thought I wouldn't bring it up into a Bitcoin movement. Now that Bitcoin's being so boring, I'll bring it up now. The point is, we get a very good idea of where Bitcoin can go structure-wise. And say, for example, we see a regular 4-year cycle bull market, which is looking less and less likely by the day now. Right? Where could we line up with a top on Bitcoin? We could line up with a top on Bitcoin around 135,000. Say we top out in the bull market. Say we top out, just for argument's sake, in March next year, okay? We top out at around 120,000 on Bitcoin. Say, and here's the next question. Say we break the entire structure as a whole. That's the third question we have, right? We could break this entire structure as a whole. And there isn't really much reason to think that couldn't happen. Because right now, as we know, Bitcoin is doing abstract things in this cycle. For example, we've previously had a trend where it takes 1,100 days for Bitcoin to break above its established all-time high. Okay, 1,100 days over here, 1,100 days over here. This time in this bull market, it's taken only 850 days. We know for a fact, and I could give you 3 other examples, very established examples that I've given many times on this YouTube channel. We know for a fact that Bitcoin is moving faster than expected on a cyclical level. I mean, the only thing you need to look at to prove that is just look at the fact that we broke all-time highs before the halving. Guys, previously speaking, the halving has occurred when Bitcoin's way below its all-time high, right? This time we broke all-time highs before the halving had been occurred. Bitcoin has moved faster than expected in this cycle. So if there are deviations, preliminary deviations from the cyclical theory and the cyclical structure, we have to understand that this chart right here has only ever played out within the bounds of the cyclical structure. So now that the cyclical structure is being deviated from, there is a possibility, in fact, a growing possibility, that this chart as a whole could be disrespected, and we could actually break this entire structure to the upside and go much higher on Bitcoin, or break this entire structure to the downside and go much lower on Bitcoin. In that case, by definition, the cyclical definition of a bull market and a bear market on Bitcoin would have to be changed. We wouldn't be moving in a structure in which we see, oh yeah, bull market every 4 years after the halving. We'd be moving in a structure much more like the traditional markets, where we see bull markets and bear markets sporadically occurring, multiple times a year. So it's very interesting, this chart, because not only does it represent a very interesting trend that could help us determine where the Bitcoin top will be and where the Bitcoin bottoms will be in future, but it also represents the cyclical structure as a whole from a different perspective. If we break this angle of trajectory line to the upside, that represents a break of the 4-year cycle, right? In a indirect way. So a very, very interesting chart. And I'll tell you right now, as Bitcoin approaches this angle of trajectory, and as Bitcoin approaches the peak of this chart and finds resistance, if it does, that is going to be an interesting time, because that is going to be a major sell signal. And then, of course, if we break above it again, that will be a buy signal. But this chart gives us so much cyclical guidance, so much bull market guidance that we just did not have before. So it's a great addition. to my saved charts, and it's a great addition to this YouTube channel. I'll continue to update it, and I'm going to do a deep dive on this chart over the next few days to try and find micro trends within the chart to perhaps strengthen it even further, because I'm sure I can find something. So guys, really important video here today. Hope you enjoyed it. Very, very big chart here. Very valid chart and a very important chart that's going to help us make decisions in the future. So keep an eye out for future videos on this one. Thank you for watching, guys. Hope you enjoyed. Before we end the video today, just a few things to look at quickly. VIP group on Telegram if you want altcoin trading signals 3 to 4 times a week, even 5 times a week sometimes. We've got altcoin trading signals being posted in there with entry, targets, stop losses, everything you need to trade them. 77% win rate over the course of 18 months. Get in that group if you're interested. Then we've got the BingX and BitGet exchanges, both extremely good exchanges. BingX is global exchange, so you can sign up from anywhere in the world, and BitGet is global minus the USA. Both very large exchanges, very reliable exchanges, and very cheap exchanges. So use my referral links down below to get 15% trading fee discounts to make those cheap fees even cheaper. Just with my referral link exclusively. It's down below. Click on it. Then we've got the Crypto Academy bull market sale. If you want to learn how to trade in an educational course, you can do so with the Crypto Academy's Become a Trader 10-unit course. This was developed by myself and Megawell Crypto. Guys, go ahead and check it out. Limited time sale there. Thank you for watching. Hope you enjoyed. I'll catch you guys tomorrow.